Then these kind of categories, you can find that this is applicable for employees, particularly the employees after a number of years of service, he is being retired or retrenched, whatever it may be, he is getting various kinds of compensation when he is going out of the employment after due retirement, etc. In such cases, whatever he receives, these are all concessions given. He may be receiving a lump sum payments, many lump sum payments for the purpose of his service completed for a long year. So that we are providing exemption under the Income Tax Act for the services rendered by him in spite of his lump sum amount he is receiving. The first one, class 10, you can see that section 10 class 10, death cum retirement gratuity. So at the time of retirement, they are providing a lump sum amount for his services rendered to the, apart from whatever conditions is for the services, they are giving a gratuity amount. And the exemption is not the complete exemption. It depends upon the whether he is in a government servant. If he is a government servant, it is complete exemption. And in the case of private employees, there is a limit provided under class. The next one, commuted value of pension. So once normally this is applicable to government servant, public sector undertaking. In some private company sector companies also they are providing pensions. So in such cases you find that the pension monthly pension is receiving it that is taxable like a salary. Any person receiving a monthly pension after service in appreciation of his service, still that pension is taxable as a salary. But at the same time, there is always an option to commute the pension, which means that what is the idea of commutation of pension in government department? They are allowing 40%, maximum 40% commute. For simple example, he may be receiving a pension of 100 rupees. So if he is receiving 100 rupees, etc., it is taxable subject to the limit prescribed under the income tax. 100 rupees taxable, but out of which 40 rupees he can commute it. What is the idea of 40 rupees commuted? When he is commuting this 40 rupees, the balance 60 rupees only will be payable as pension. He will be receiving only 60 rupees payable as pension. For this 40 rupees, they have a calculation. Maybe, for example, what will be the value of these 40 rupees over 20 years? 20 years, if he is receiving the 40 years, along with interest, etc. What should be the lump sum value? So instead of 40 rupees, they may be providing a 40,000 rupees in lump sum immediately to him. That is exempt. That is exempt. But the remaining uncommuted portion, 60 rupees, regularly he will be receiving as a pension that is taxable. Similarly, retrenchment compensation he is receiving, leave salary during his time receiving an employee, he is given exemption.